The second thing I would say, that has really been paramount to my success. Well, one of the things, that I've tried to teach, and it just becomes axiomatic, is the idea of always thinking risk first. And, almost every successful trader I think I've known, if they either do this intuitively well, whether they would use this kind of language or whether they think about it, but that they're always calculating or trying to get odds on their money, if you're using gambling terminology, or they're trying to make good risk adjusted bets. And what I mean by that is, on average over time, their expectation is to be way ahead, because they're thinking about the relationship between risk reward, and specifically then creating that asymmetric relationship. So whereby they can be wrong 1, 2, 3, 4 times in a row, but very quickly, once they're right, make all of that money back and a lot more. People are often surprised when I tell them, I'm usually wrong a little more than I'm right. And they're, well, how could that be? Well, because I'm structuring in asymmetry. I'm layering in asymmetric reward to every decision I make. And this plays out in a few different ways, but I think one of the most important is this idea of, if I like an idea, or let's say it's, in most cases it's a stock. I want to buy a stock, but I can't find a good low risk way to get in, then I have to either wait or just pass on the situation, because I want to get multiples of my risk. So, and this is one of the reasons why stocks or markets that are wildly volatile, and the way I would define that, or we would define that, is that they are carving back and forth in huge swaths. A mistake people often make is they think a momentum situation is very volatile. Not necessarily. Usually that, if that momentum is moving one way, that's, we would define that as alpha, not volatility. It's that knife that's cutting back and forth that can really cut a sort of low risk directional trader to shreds. And so, yeah, I am trying to find a way to get on board something that I think has a potential asymmetric payout. I can't understate this. This may seem remedial to some folks, but that is ultimately what is driving a lot of my decisions. So maybe I love a certain story, a certain stock, a sector, or I really find it interesting. But if I can't find an asymmetric way to put it on, meaning that where I'm right, I'm going to get multiples of my average risk, then I either have to pass or wait.